The stock market gave investors a nice end of the month surprise with a gain. Let's get some common sense from Craig on what else might be in store for 2024. Craig Bolanos is the CEO and founder of Wealth Management Group. Craig, the old Wall Street saying is, as goes January, so goes the year. What can you tell us?
Well, I got to say, the back half of January certainly helped the major indexes close out the month with a gain, 1.6%. You know what? Similar to where we left off in 2023, it was just a handful of mega cap tech names that did the lifting in the month of January. In fact, a lot of people might be surprised to know that just 3 companies contributed to more than 80% of the January gain in the S&P. But, you know, Angela, we're really talking about this. History shouldn't be a mystery. And from a historical perspective, a positive January has been a bullish sign for stocks. I mean, the popular maxim, you mentioned, as goes January, so goes the year. Well, it's actually stood the test of time. When I say standing the test of time, since 1950, the S&P 500 has posted an average annual return of 16.8% when we have positive Januaries. And furthermore, the index is up 89% of the time.
89% is a very high batting average. Do you think the stock market this year will fall in line with history? What should investors watch?
Well, you know what, Angela? I mean, the prospect of a soft landing, falling inflation, shift from rate hikes to rate cuts, it's kind of helped offset what I think is an underwhelming fourth quarter earnings season thus far. So yeah, there are some short-term overbought conditions. I got to acknowledge that. But the technical backdrop of this broader market does appear to remain bullish. And that's further supported by that positive January, suggesting the path of least resistance for stocks is probably going to be higher. Now, to put this in perspective, we at the Wealth Management Group, I'm not looking for a 16% rate of return in the S&P 500. I just don't think earnings can get there in 2024. But if we can print $235 of earnings per share on the S&P 500 composite, then there's room for stock prices to advance in the strong single digits this year. But there's so much riding on something. It's all riding on inflation, because if we can continue to get some deflationary pressures, then the Federal Reserve is going to be able to cut those interest rates a couple of times. And remember, cutting interest rates tends to support and can be accretive for asset prices. So the truth is, I think investors should really stay net long, now that we're into 2024. And I think people just need to make sure they're doing some proper rebalancing with their ingredient weights so they don't get too far over their skis. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. If you want some help getting retired, staying retired, because you don't want to just survive retirement, you want to thrive in retirement, well then check out our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.